Hi everybody, it's Jared Johnson with Day Traders FX. I'm happy to be with you today and thanks for watching this short video. It's going to give you a quick outlook at how we look at the market, how we really find where things are going. I like to call this the market temperature. Is it a hot market? Is it a not hot market? Is it risk on, risk off? What do we need to be looking for here? So what I love to do is go through multiple charts, and this is really kind of the most important way that we find this kind of stuff out. Remember that everybody wants to know how do banks trade? How do hedge funds trade? This is how they trade. This is the stuff that you've got to understand. You don't need to be a finance PhD. You don't need to be an economist. You don't need to be a billionaire hedge funder to understand this. These are simple, just a handful of simple things that you can look at to really determine where things are headed in the currency market and the stock market for that matter as well. So just a quick introduction. I'm Jared. Once again, this is my family. I'm a full-time trader, and I love talking to traders about this kind of stuff. This is my favorite stuff. I've been trading for a long time, more than 15 years of trading. I've been training and consulting for traders for a lot of years as well, and it's been a great, wonderful experience. And so I'm really happy to talk to traders about this kind of stuff and make sure to help people stay on the right track when it comes to trying to determine where the market might be headed. Here's how I look at all of this, right? I look at four specific things. Now, part of you might feel like, I kind of want to shut down, right? I'm seeing things that look very stocky and I'm a currency trader and yada yada, right? Well, this is going to be very, very important for the currency side of things, but it's very important for everything to just get a feel for what the market is up to, what it thinks it's doing. I'm going to give you a couple of very simple ways to look at this. I look at these four charts here, right? I look at the VIX, I look at stocks in general, and I'll typically just look at the S&P, the SPY specifically, which is the index fund for the S&P. I'll look at bonds, U.S. government issued bonds, good old fashioned. And then I will look at, which is TLT by the way, and I'll look at yields. And this is how I'm going to formulate my picture, and I'm going to show you just how I do it. So let's go right to the charts and see if we can kind of make sense of some of this, right? So as I said, I look at, and it can be in any one of these orders, by the way. You don't have to look at any one first, right? But we just want to make sure we look at all of these. So let's look at the VIX real quick here. Basically, what I want to see is where have been the long-term levels? Where is the market reacting? Where does it not seem to go too much higher or too much lower? Now, if you're unfamiliar with the VIX, two things to do. Number one, go to Investopedia and just search the VIX, what it is, what it means, and so on. But this is the volatility index, and basically this is referred to as the fear index. If the VIX is high, the market, for the most part, is kind of panicked. If it's low, everything's feeling pretty confident and pretty decent, right? And so you can see if we just kind of go back to this little area right here, you can see that going back to kind of the beginning of 2018, we've seen the VIX hit these low levels of about 11 or 11 and a half. You can see us trading at about 13, almost 14 right now. But really about as high as it ever gets is kind of in these 20s here. 25 is kind of that area. Now, yes, we absolutely have spikes, right? Here's a big, wild, crazy spike that we got in the beginning of 2018. And then we had this end of 2018 big spike as well, right? This was when we saw the stock market sell off and the currencies, everything just went nuts, right? But for the most part, this represents several days, right? This spiked up here February 2nd and was back down below by, it stayed up in that area for about a week. Again, spiked up and down in the same day, up and down in 2 or 3 days. This one lasted a little bit longer, December 18th to about January 1st or so. So, again, we'll spend a week or so up there. But for the most part, the VIX kind of operates in this, 11 to 25 range. And so this is the first thing that we're going to look at. This is going to tell us how do investors feel, right? Up here, the market is feeling afraid and panicked, but it's also at a point where fear potentially could be peaking out. Down here, investors are feeling confident, comfortable, not afraid. But at the same time, that comfort could be coming to an end, right? So we kind of get to these highs and we get to these lows and we get to these highs and so on. So what we want to look at is we look at this VIX and we see that this channel that it's in, when we get up into the 20s, chances are it's not going to get a ton higher. When we get down into the 11, 12 range, chances are it's not going to get too much lower. So this is kind of where the VIX bounces around. Now I'm going to tell you how all of this pertains to currencies and how this all works, but this is very important. So number one, we're looking at the VIX. We're trying to see, is the VIX high, is the VIX low? VIX. Just look at it right on your charts, the VIX. Then I'm going to go over here, as you see right here, and I'm going to look at just kind of how are stocks behaving, right? We've got the SPY. You can look at the Dow. You can look at whatever you want, the DIA, SPY, whatever. So we're just trying to get a feel for how are U.S. stocks behaving. So now I'm going to go over here to SPY and just say, okay, how does this look, right? And I'm going to try to do some channeling. I'm going to try to just kind of see where things are going. It's not too hard to see that that we can kind of see the SPY running up and doing this kind of stuff, right? We see highs and and this kind of thing here. So SPY has kind of been bumping up, right? Here's January 2018, and then we had that big sell-off. That big spike up in the VIX was the big spike down in stocks. And then here's the end of the year of 2018. We saw again a big spike up in the VIX, and we get a big run down in stocks. And so it just kind of continues to hit these areas and hit these areas, and we're expecting a reaction, right? We're expecting a bit of a reaction. And we are getting those reactions, right? So we're kind of hitting these areas. So I'm trying to see, okay, if the VIX is down, stocks will be up. If the VIX is up, stocks might be coming down a little bit. So again, you can see a pretty tight little correlation here. If you look at this daily candle, that's a big green daily candle on the VIX. That means there's a little bit of discomfort, right? Investors are saying, okay, let's be careful. And if we go back to the S&P, we see the exact opposite direction. So that discomfort translates into stocks starting to go down, indexes in general starting to go down, right? So that's kind of what I'm looking at there. So now I'm saying if the VIX is high, stocks are going to be behaving badly. But these two right here give us some really good stuff as well. So we've got bonds and yields. So I'm going to go over here and I'm going to look at TLT, right? And TLT is this interesting chart of, this is an ETF that tracks 20-year U.S. Treasuries, right? This is, we're loaning money to the government and they're paying us interest, right? And so this is tracking the value and the demand for those guys, right? And so you can see that at the same time, if we go back to these charts, see this right here? This is October/November 2018. What did the VIX look like in October, November? It started spiking up. October, we get these runs up. So TLT, our bonds heading straight up. The VIX, panic, heading straight up. SPY, that same time, September, October, heading straight down. So we're starting to see a bit of a correlation here. So as I look at this TLT, this basically means investors are panicked and they want to go for a safe investment, right? US, if you go buy some US bonds and you want to just hold on to those, they'll pay you a couple of percent, 2% or less. And it's a real safe investment, right? And that's a really good way for us to start to determine how the market is feeling about things. If people are buying up bonds like crazy, we're going to see this chart going higher, and that means that it's a scared market. The VIX will be running higher. We'll see the S&P struggling, but this has kind of made this big run up, and then we're on a longer term chart here, so it's kind of started to pull back a little bit. And again, we've seen that in the S&P, so as this kind of is running down, we should see the S&P running up. It's kind of running up, it's pulling back, but it's going, oh, okay, oh, a little bit higher, oh, a little bit higher, right? We're seeing that there. And when we go over here to TLT, we see that this is, high, a little bit lower, high, a little bit lower, high, probably a little bit lower, right? So investors are starting to say, well, I feel a little more comfortable with the market, so I'm going to buy less of the safe, low-yielding investments like government bonds. And I'm going to go back into the stock market, right? And so that's the kind of thing that we'll start to see. We'll see TLT going down. This is, the value of or tracking government bonds. This will start to go down. People are saying, I'm more confident. I want to go for the higher risk investments, the ones that are going to make me a little bit more money. And so we'll see this start to come down. And we'll see the VIX will start to come down as well. We'll see that going down. And we'll see the S&P going up. And at the same time, I'll look at these guys right here. This is yield, right? This is kind of where the this is what these government safe government investments are paying. These treasuries and these bonds and so on, right? These are paying us this much percent. A 30-year yield on a government bond is 2.1%, almost 2.2%. So as bonds go up, because people are buying them, yields go down. The government says, I don't have to pay you as much money to borrow your money, right? Because everybody is saying, hey, all we want is government bonds because we're scared of the stock market. And so the government says, well, we don't have to pay you so much money, so we'll see these go down, right? We'll see the 30-year, the 10-year, we'll see these long-term yields start to go down. The government's paying us less money to buy their debt because we want it so bad. But if we're feeling really comfortable and confident with the market and with the stock market and so on, then we'll see all those things start to shift, right? We'll see bond prices are going down and we'll see yields are going up. The government's saying, hey, guess what? Hold on. I'll pay you more money. I'll pay you more money. Just buy our debt. We got to sell our debt, so we'll pay you more money. So they're saying, okay, right here we'll pay you 1.9%. Oh, never mind. How about 2%? 2.1%, 2.2%, 2.3, almost 2.4. Because people are starting to pull out of the safe investments and they're going for the riskier investments. So that is how we're going to start to gauge the market. Now, that's all fine and dandy, but how does that pertain to currencies? How can we use this to trade currencies? Well, I'll show you here in just a moment. So now that we have a better understanding for how we're going to judge the temperature of the market, whether it's a risk on or a risk off market, and once again, to say risk on, let's type it here. So if we're looking at a risk on market, that's going to mean VIX is down. That'll mean S&P up. That'll mean TLT, bonds and that type of thing, those will be down. And that's going to mean yields will be up. So remember, when we're looking at that kind of thing, a risk on market means the VIX is down. Everyone's feeling pretty happy with things, so fear is low. Stocks are up. Bonds, these low yielding investments are down. Yields are up. The government's saying, we'll pay you more money so that we can, so you'll buy our debt. And so this is a risk on market. Now, risk and risk off would be the opposite, right? The VIX would be up. Stocks would be down. Safe investments would be up. What safe investments are paying would be down because they don't have to pay so much. So that's what a risk on market is. And how does that play out on this side of things? Well, it plays out very interestingly well. And there's a lot to talk about, but for the sake of keeping this video short and sweet and giving you the idea, when we have a risk on market like this, we typically will see, for forex, we'll see JPY will be weak, right? When stocks are doing well, the JPY is weak. We're going to see Swiss franc weak. We're going to see, most of the time, Aussie, New Zealand will be strong. And from time to time, USD gets really mixed here. There used to be a really tight relationship, but USD can be weak. So, but kind of keep take that fourth one with a grain of salt there. But these are all pretty consistent. If stocks are up and the VIX is down, then we're going to see yen weakness, Swiss franc weakness, because these are safe haven currencies, right? When things are panicked, when there's a risk off market, So remember, let's type this in here because I want to make sure that everybody understands this. This is so super duper important. So when we have risk on and risk off, so let's look at risk off. So once again, we're going to have VIX will be up, and we're going to have SPY down, and we're going to have TLT up, and we're going to have yields down, right? So this is kind of the definition of a risk off and a risk on market and how that plays out. So again, with risk on, it's going to look like that in Forex. With risk off, it'll be just the opposite, right? If the VIX is up, everybody's panicked. The S&P is down, stocks are behaving poorly. TLT is up, everybody's running to safe investments. Yields are down, the government doesn't have to pay you so much for those safe investments because you want them, because you're scared about what's going on in the market. So that would be just the opposite. With a risk off, we'd see yen strength, Swiss franc strength, Aussie and New Zealand weakness. The dollar, again, a little bit mixed, but probably the dollar would be leaning a little bit towards strength. So this is how we start to judge the market. There is so much more to say about this, and I'm very excited to hold a bit of a longer webinar in the very near future about these exact topics. But this is super important stuff, and I want you to be able to understand this and how it works and how you can use this to always be on the right side of the market, because there's other elements that are involved here, but this gives us an idea of how to gauge the temperature of the market. Is it a risk on market? Is it a risk off market? These are the things that we have to know, and these are the charts that we have to look at. So I hope that was helpful. I hope this gives you a better idea how to look at things. There's so much more to talk about. And what I want you to do now is invite you to go to my website, daytradersfx.com, click on Learn More right up here, and that will give you the opportunity to get involved in some of our coming webinars that will talk more about this. And that'll even give you the opportunity to give me to give us a little bit of time to have a quick phone call and talk in more detail about how all of this should play out and how you can use this more for your own trading. So again, go to daytradersfx.com and just click in that upper right corner, Learn More. daytradersfx.com, Learn More. Or if you want to go to the exact link, it's daytradersfx.com, application form, /application-form. And this will just kind of put your information in so that we can see so that we can connect, and I can show you how this really works in the next level of how this all plays out. So I hope that's helpful. I hope you've enjoyed this short video. Please don't hesitate to let us know if you have any questions. Go to daytradersfx.com and scroll down and hit contact and send us emails, questions, comments. We're here and we're very much happy to help. Thanks everybody. Good luck. There is so much more to come on this, but for now, we'll leave it at that. Take care. I'm Jared Johnson. Have a wonderful day.